Hey everybody, it's Jonathan. Just finished an awesome futures class and I want to share a cool trade that we found. I want to share this trade because I'm going to make a video in a week and I'm going to boast about how much money we made off this trade. That's why I'm making the video right now, so let's get going. In front of you, we're using our edge tools. You can learn about these on the website. This is Bond Edge, and all we're looking at is the ZN contract, which is the 10-year futures contract, and the bonds, the 30-year futures contract. These are implied volatility bands. Implied volatility bands. So what you can see is over time, going back to March, volatility in fixed income has gone lower. Or professionals will say that volatility has come in. So the market is expecting smaller potential moves. When we look at the outright future contracts, which I'm doing with the ZN and the ZB, which is right here, again, these are just the implied bands. When the market trades down to the implied bands, they're going to act as support. When the market trades up to the bands, it's going to act as resistance. What you'll also notice is when the ZN and ZB really start to break away from one another, when their correlation breaks down, that might present a potential trade opportunity, like here when it comes into here. Well, the trade that I like right now, and it's really predicated on this obnoxious volatility that we've been starting to see in the bonds. The trade that I like right now, that I'm going to be sharing in a week, making that video about how much money that we make from this call, is selling the blue line and buying the green line. Selling the ZB, buying ZN. One extra component of this trade. So you can buy the ZN, the green line, and sell the ZB. We call that the knob. It's called the knob because that's notes, 10-year notes over treasury bonds. Notes over bonds, the knob. You can do a knob trade. What I also like is selling one extra ZB contract. With these edge tools that Pablo Lucina and I built, we can look at the exact position via a chart. So watch what I'm going to do. Just going to go to the beaker here. Open this sucker up. I no longer need to see cycles. Cycles are when we break it up into 1 month at a time. We could break it up into 1 month, a day, a week, a quarter, a year. We don't need cycles now. So I'm turning those off. And if I scroll down here, what I want to do is take you to the knob. Notes over bonds, right? We want to buy the knob. So when we buy the knob, it's usually 5-2, but I'm going to make it 3.0. And the reason why I'm doing that, I'm going to remove the ZB. I'm going to remove the ZN because I don't want to look at the outright contracts. Now I want to look at the entire spread. Knob, yes. You can see here the knob is just ZN versus ZB. Okay, apply, okay. So here's what I got for you. We just finished class, explained this entire trade. I explained how to set up the charts. It's a little bit of an advanced trade, but trading is getting more advanced. Basic technical analysis doesn't work. We need to look at sophisticated opportunities. My favorite trade is trading the ZN against that ZB, buying ZN, selling ZB, but also I want to sell an extra ZB because we're right by that implied volatility band. So I just charted the exact trade, and that's what's in front of you. This is going to be pretty advanced, so if you're watching this and thinking that you're going to put this trade on, I would be very, very careful. This is a great one to paper trade, a great one to watch. Again, next week I'll make another video because this thing is going to be way up here. and that's going to be 17,000 to 6,000. That's going to be about a 10,000, 11,000 winner on some relatively 2,500, 3,000 margin. Excited for this trade. Great class. Let's follow along. Paper trade. Let's see how it works out. My name is Jonathan Rose. I'm the owner of Masters in Trading.